So this year has been very, very bullish for the Ghana stock market, and we can see that one of the key indicators when it comes to the bullishness of the Ghana Stock Exchange has to do with the GSE Financial Index. When you look at the year to date, it's trading 41.8%, whilst the GSE CI, the Composite Index, is trading like 28%. So basically, financial institutions are on an upward trend. Now we can go over the evaluations and see if there's sentiment that's driving this bullish nature of the financial companies. When you look at insurance companies, when you look at the banks, you can see that their share prices continues to increase, and the demand is not dying out anytime soon. So in today's episode, I would want to go over almost all the banks on the Ghana Stock Exchange, so that should in case you are interested in investing in any of the banks, you would probably have some fair idea of what to look out for, which banks still provide an attractive opportunity for you to buy into those particular companies. So when we come onto this chart here, we can see that we have majority of the banks which are listed on the Ghana Stock Exchange here. Now I left out a few of them, so you could probably add them to yours if you are thinking of doing something like this. Now this is a comparable company analysis, and it's usually used to compare banks to each other to see if they are overvalued or undervalued, depending on whatever factor. You can also use it to determine the implied share price of a company, depending on the formula you're going to use. We have EcoBank, GCB, Societe Generale, Republic Bank, Access Bank, Standard Chartered Bank, and we can see the current prices at which they are trading at the moment. Their shares outstanding, you can see Republic has the highest shares outstanding, followed by Societe Generale and Bank. So I think that's one easy thing to look out for. In terms of equity value, we can see that Standard Chartered Bank has the biggest equity value, and I'll probably have to say that's because of its share price. It's trading way above all the other companies, so it's either the fundamentals of Standard Chartered Bank are just above that of the other companies, or it's trading at a high valuation. We'll probably have to go over that. When you look at the net debt, this is usually the debts of the company minus the cash available to those companies. So if it's positive, it means they have a positive net debt or a positive net cash, depending on how you want to look at it. We can see that EcoBank has the biggest net cash or net debt, depending on how you want to look at it. The tangible book value shows like the true value of the company, and we can see that EcoBank also leads, followed by GCB, then Standard and Societe Generale. When we look at the net income, this is the profit the company makes after taxes, and we can see that EcoBank makes the most profit, 1.7 billion, followed by GCB 1.3 billion, then EcoBank, Standard Chartered Bank 700 billion. So despite Standard Chartered trading at 27.88, the company that makes the most in terms of profit is EcoBank, 1.7 billion. So this is the average P ratio for the banks I use, and the average P ratio is 3.15. So one thing to note is that if a company's P ratio is lower than the average, normally we assume that the company is undervalued, and the same thing can be said for companies whose P ratio is above the average. With this P ratio, I'm comparing the banks to each other. You can also compare the bank to its previous or historic P levels to really have a fair idea of where its P is normally ranges at. With EcoBank, we can see that the P ratio 1.64 is way below the average, and it looks like one of the lowest here. GCB is also below the average, but well above EcoBank. We have Societe Generale 2.5 for, and the only two companies that are above the average are Standard Chartered Bank and Access Bank, which is well above there. So we could say just from the PE that Standard Chartered Bank and Access are overvalued. We have Cal Bank, which is the lowest PE, trading at 1.35, which is way below the average PE. Now we can say that yes, Cal Bank is undervalued, but another way to also determine the PE ratio is that investors are concerned about the future performances of the company, so they are pricing that into the stock. Like I said earlier, you can use the PE ratio to determine the fair value price for each of the companies, and this is what I listed here. So we can see that in terms of the comparable company analysis, we can see that the fair price of EcoBank, based on my analysis, is 16 Ghana cedis, EcoBank 17, Societe Generale 2.54, Republic 2.75, Access 8 cedis, Cal Bank 1 cedi, but still, and Standard Chartered Bank 13 Ghana cedis. So if the fundamentals of the company didn't make sense to you and you were probably wanting or you are willing to invest into these companies, these are prices that's based on multiple company analysis. The share price of these companies should be trading at the moment. So based on this, we can see that EcoBank is massively undervalued, GCB is also massively undervalued, Societe Generale in Public is, even though undervalued just a little bit, is closer to fair value. We have Access and Standard Chartered Bank being massively overvalued, and Cal Bank also massively undervalued, but it's more based on concerns about the company rather than investors not really seeing the opportunity that Cal Bank provides. One thing I just want to note out is the way I listed these stocks is a visual representation of how I feel about each company. The list from the first to the last is what I would probably say is the best to the worst, especially when it comes to the banking sector in Ghana. I think EcoBank provides the best value, followed by GCB, and I think Cal Bank and Standard Chartered Bank are two of the companies that I, at the moment, would probably not have in my portfolio, or until some things changes, I don't probably see myself buying anytime soon. So up next, what I want to do is to go a little bit deeper into the Q1 reports of the top 3 companies that I personally feel are the best when it comes to the banking sector in Ghana. I might probably do another video going into the worst companies' statements, and if you guys are interested in that, let me know. First off, looking at EcoBank Ghana, the company I believe to be the best undervalued banking stock at the moment, is the company I would personally be trying to invest into if an opportunity does come, and I'll probably be making a separate video just explaining my thought process on this company. We can see that revenue grew from 1 billion to 1.1 billion. A slower growth, so that's where maybe I'll probably not be happy with the company. I want to see massive growth when it comes to revenue, so I'll probably be looking at that in the Q2 reports. For printing income, it was also more of a slower growth from 1.09 billion to 1.19 billion. Profits after tax also grew, but at a slower pace. When we look at the quantitative disclosures, we have capital adequacy ratio, which is going up, so it's good to see. For non-performing loans, it's going low, but at a slower rate, so I want it to be going down at a higher rate. The company is becoming more liquid, so I do like that to see there's more cash on hand for whatever purpose that they do want to take. Looking at GCB, we have revenues growing from 700 to 900 and 100 to 104. So revenue went from 900 to 1.2 billion. So this shows a faster growth. This is more of what I like to see. Looking at the capital adequacy ratio, that actually went down, so that is it does put me off a little bit. I would want to see that figure going up. I don't like to see it coming down. The non-performing loan went from 22 to 14.9. Very, very good. It means they are being very efficient when it comes to their loans. Finally, looking at Societe Generale, we have them increasing net interest income, net fees and commissions, and operating income as well. Profit after tax went up at a higher rate, so I do like that. And for the quantitative disclosures, capital adequacy ratio going up, very, very good. Non-performing loan, not as great as GCB, but also great, being efficient with their money. Liquidity ratio going up, very, very good to see. Just from the statement, I'll probably want to push GCB above EcoBank, because I think GCB is more efficient when it comes to each line item in the company. They are growing revenues at a faster rate. So even though it's still a little bit undervalued, it probably missed the cheapest time you could have bought it at, and that was like about 2 to 3 months ago. But that's my thoughts for the top 3 banks that I think are massively undervalued at the moment, and banks that if I was investing into the financial sector, especially into banks, I'll be trying to get into. Let me know what your thoughts are. Comment down below if you are invested in any of these stocks, or if you are planning on investing into them. What do you think about them? I'll definitely want to hear from you guys. Thank you so much for watching, and have a wonderful day.